Good morning, friends. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, and along with that, key sectors and stocks to focus. Now, two important macroeconomic factors have turned favorable. The first one being dollar index, which has cooled off to 105.60, 105.17, is sustaining around that level since yesterday. And the second being Brent crude oil prices now stabilizing around 85, $86 a barrel. And also looking at the crude charts, it looks like post the Monday's up move up to $88, it's once again headed towards 81, $82 a barrel on the downside. Now, crucial data point today would be the US CPI number, which would be an important factor for the Fed's decision making on interest rates. Now, yesterday Nifty gave a strong gap up opening as fresh buying emerged above 20-day exponential moving average. However, if we see Nifty, the index confined itself in a 50-point range for the rest of the day and ended 0.5% positive above 19,800. Bank Nifty too post a positive opening yesterday, witnessed selling pressure from higher levels, and it finally ended the day 0.35% in the green. Now, friends, the most important trigger for our markets going ahead would be the results season, which has begun with TCS yesterday. Infosys would be delivering their numbers today and HDFC Bank on Monday. So all these three large caps would now determine the trend for the markets going ahead. So before moving on for levels for the day, let me tell you that slowly a strong base is being formed around 19,500, 19,600 zone. And this can be ascertained from the fact that despite the negative news related to the Israel war, Nifty has managed to hold 19,500 levels on Monday. And along with that, the volatility index has not even crossed 12.5 levels. So I feel that although there might be intermediate fluctuations and shakeouts, but we are in a structural bull run and we should utilize the dips to pick up quality stocks from a medium term perspective. Now, coming to index levels for the day, going forward, Nifty could take support around 19,730, 19,750 zone. Until this support zone holds, extension of this current rebound could be witnessed up to 19,880, 19,900 on the upside. Major resistance would be around 19,900, 19,920 levels for the day, where the index had posted a notable gap last week. And again, this is the 61.8% Fibonacci retracement level for the entire fall from 20,222 to 19,333, which is witnessed in the last month. So this level of 19,900, 920 becomes an important resistance going forward. Above 19,920 zone, a bigger short covering move up to 20,000, 20,050 could be on the cards. Looking at the option writing data, put writing is visible in 19,800 and 19,750 strikes, while on the calls front, 19,900 calls are having a significant share of open interest built up. So that leads to a trading range of 19,740, 19,750 on the downside and 19,900 on the upside. Coming to Bank Nifty, key support for the Bank Nifty now lies at 44,300, 44,350 zone. And important is that Bank Nifty now manages to close above 44,600 where the 20-day exponential moving average is placed. Yesterday too we saw selling pressure re-emerging from this zone and Bank Nifty has closed below this level. So 44,600 becomes all the more important level from here on. Above 44,600, Bank Nifty could continue its up move up to 44,850, 44,900 on the upside. While in case 44,300 is taken out, it could lead to further selling pressure up to 44,000, 43,950 zone. Now, friends, let us see which stocks and sectors are looking positive from here on. Yesterday's positive chart setup was visible in cement names as well as auto names. And speaking about cement, all the stocks, Grasim, Ultratech, ACC, Ramco Cement, all have witnessed a decent breakout on the upside. Even auto names such as M&M, Hero Moto, they all have witnessed a good momentum on the upside, and we feel both these sectors could continue doing well for the day also. Apart from these two sectors, stock specific action was visible in Bajaj Finance, Bharti Airtel amongst the large caps, and amongst the mid caps, MCX, Indus Towers, Dixon, United Spirits. These stocks have added positions on the long side in terms of open interest. Also, the chart setup on the daily and the weekly time frame is pretty strong. One more important update with respect to the market momentum. Now, Reliance has rebounded from a crucial support zone of 200 DMA around 2290, 2300 zone, and this could provide an additional support to the indices going forward. in case there are any negative result surprises from the other large caps. So friends, during the weekend also we had discussed Reliance taking support around its 200 DMA, and possible rebound could be there around the corner because of strong put writing in 2280 and 2300 strike prices. So this has worked out. We have seen a rebound yesterday. A move about 2355, 2360 would confirm a potential reversal up to 2420. Now coming to the FII data, FIIs yesterday have been net sellers in the cash segment to the tune of 400 crores, and DIIs have been buyers to the tune of over 1,000 crores. FII's long short ratio for index futures is steadily improving in the last 5 days from 24-25% to 29%, as they have squared off more than 11,800 existing short index future positions. On the stock futures side, FIIs have bought closer to 13,750 contracts. On the index options, FIIs have bought around 1,42,000 call option contracts, and which is almost double to their existing net call longs. But they've also added 1,67,000 contracts of index puts. And this is an increase of around 80-81% from their existing put long positions. So this needs to be watched. So friends, let us summarize what we have discussed till now. We feel that the frontline indices could stabilize further as we are witnessing a fall in India VIX, dollar index as well as crude oil prices. Now key support for the Nifty for the day could be around 19,730, 19,750 zone, and resistance could be witnessed around 19,880, 19,900 on the upside. While for the bank Nifty, the key support could be around 44,300, 44,350, and the first resistance could be around 44,600, where the 20-day exponential moving average is placed, and above that the next levels to watch out for would be 44,850, 44,900. So friends, that's all for today. Thank you all for regularly listening to our podcast, and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.